If you've been running your restaurant for 2 years or more and you're ready to expand, I am about to show you some funding strategies that most restaurant owners never hear about. These are strategies that can help you open that second location, upgrade your equipment, or even acquire a competitor without destroying your cash flow. The restaurant industry gets a bad rep with lenders, but established restaurants with the right approach can access surprisingly affordable capital. The key is knowing which funding tools work for which expansion goal and which lenders to use. I'm Siegel, founder of Small Biz Heroes. I've helped business owners across every industry secure over $80 million in funding, and restaurants present some of the most interesting opportunities and challenges. Here's the truth. Traditional banks are cautious about restaurant financing because they see the industry failure rates. But the right lenders understand restaurant cash flow patterns, seasonal variations, and their equipment needs. If you've survived and thrived for 2 years or more as a restaurant, you're not a startup anymore. You're an established business with proven revenue patterns, and that changes everything when it comes to funding options for your restaurant. Today, I'm going to show you exactly which funding tools work for different expansion goals, how to position your restaurant for approval, and the strategy that gets you from survival mode to growth mode. Let me explain why that 2-year mark is so significant for restaurant financing first. You have tax returns now, and these tax returns show actual performance, not just projections. Lenders can see your seasonal patterns, your profit margins, and your ability to manage costs as an operator. Second, you survived the critical period where most restaurants fail. Statistically, most small businesses fail within the first 2 years. Restaurants, forget about it. The restaurants that make it past 2 years have a much higher long-term success rate. Third, you've established vendor relationships for your restaurant. You've established customer loyalty and operational systems. Banks and alternative lenders view this as an extremely high risk reduction. But here's what many restaurant owners simply don't get. Different expansion goals require different funding strategies. Lenders evaluate equipment financing differently than they would evaluate working capital. Location expansion differently than renovation projects. The key here is matching your expansion goal to the right funding tool. Expansion goal number 1, equipment upgrades. Let's start with new equipment for your restaurant. New POS, new kitchen equipment, a hood, a fryer, dining room improvements even. The best funding options for your restaurant that needs new equipment or upgraded equipment is equipment financing. Terms on equipment financing typically run 2 to 7 years. It depends on the equipment type and what you want as an applicant. If you want a lower payment, you're probably going to do a longer term, but that longer term is accompanied by a higher interest rate usually. If you want a lower interest rate and to pay less on your financing, but a higher payment, then you'll pick a shorter term. A lot of equipment lenders also pick term based on how long that equipment is expected to last. Kitchen equipment often qualifies for longer terms, whereas POS systems might qualify for shorter terms. Here's the advantage. Many equipment lenders understand restaurant cash flow patterns. They know you make money daily, not monthly like other businesses waiting on net 30 or net 60 terms. All you guys gotta wait on is your credit card sales to batch over to your bank. And then the most important thing, tax benefits. As a restaurant owner, do not forget about your best friend. Section 179 tax deductions. You can often deduct the full purchase price in the year you buy your equipment, not depreciate it over several years. This can significantly reduce your tax liability while improving your operations. Here's a success story. I worked with a restaurant owner in my book who used equipment financing to upgrade her kitchen. New equipment increased efficiency by 30%, reduced food waste, and improved customer wait times. The increased revenue paid for the equipment loan within 18 months, and then that increased reputation continued to compound on itself. Expansion goal number 2, a second location. After you improve your equipment and your operation is running like a well-oiled machine, opening a second location is the classic restaurant expansion dream and the most capital intensive. SBA loans are your best friend for established restaurants. SBA loans often provide the best terms for location expansion. You can borrow up to $5 million with terms up to 10 years for working capital, 25 years if you're buying real estate. Current rates are around 7.5 to 9.75 for most qualified borrowers, much better than most traditional bank rates for restaurant financing for sure. And here's what SBA lenders typically want to see. They want to see 2 years of profitable operations, personal credit score above at least 680, and a debt service coverage ratio of at least 1.25. So for every dollar that you're going to be paying each month on the loan payment, they want to see that you make $1.25. And then a detailed business plan for the new location, and also a market analysis showing demand in that new area that's held within the business plan. And then there's the alternative strategy. Revenue-based financing if SBA paperwork feels overwhelming or you can't qualify yet for some reason. Revenue-based financing can work extremely well for restaurants that want to expand to new locations, and it's a lot easier to access. These lenders focus on your daily cash deposits rather than traditional credit metrics like SBA lenders. Terms are shorter, typically 6 to 24 months. But approval is a lot faster and paperwork is minimal. And as long as you're going to be making more money with the capital than what it costs you, then I think you should do it. Expansion goal number 3, renovating and remodeling. Renovating your existing location to increase capacity, update decor, or add new service areas. Business lines of credit are my favorite for this. For renovation projects, a business line of credit gives you flexibility to draw funds as needed rather than taking a lump sum. You only pay interest on what you use, and as you repay the line, those funds become available again. And another added benefit is that the earlier you pay off most lines of credit, the more money you save. Working capital loans are also a great solution for larger renovation projects. Fixed-term working capital loans provide the lump sum you need with predictable payments. Then there's the timing strategy. Plan renovations during your slow season to minimize revenue impact. Many restaurant owners renovate in January or February where business is naturally slower, unless of course you're a restaurant owner in Florida. Expansion goal number 4, franchise acquisition. Buying into a franchise or acquiring an existing restaurant. Tons of people do this, and you can too. If you're buying into an SBA-approved franchise, you can often get favorable terms because the SBA recognizes the reduced risk of proven business models. Then there's also acquisition financing for acquiring existing restaurants or competitors. Lenders evaluate the target business's cash flow, not just your personal credit or the cash flow of your existing business. This can be advantageous if you're acquiring a profitable location, since the lenders look at the cash flow of the location you're acquiring first. Now I'm going to get into some restaurant-specific positioning strategies and share with you guys the secrets that make restaurant financing applications successful. First one is you want to emphasize daily cash flow. Restaurants have unique advantages. Daily cash flow is one of them. You generate cash daily, not monthly. Emphasize your daily deposit patterns and consistency. Use your strengths to your advantage. Second, show seasonal planning. Lenders want to see that you understand and plan for your seasonal variations. Show them how you manage cash flow during those slow periods and that you were proactive and knew that they would be coming. Third, demonstrate cost control. Restaurant lenders love to see food cost percentages, labor, cost management, and waste reduction strategies. These prove operational sophistication as a restaurant operator. And the most important reason is because every single penny counts. Restaurants already have razor-thin margins. So if you can do this correctly, it's very impressive to an underwriter. On top of this operational sophistication, vendor relationships are very important. Strong vendor relationships with net payment terms show financial stability and industry credibility as well. And last but not least, in terms of your positioning as a restaurant owner, customer loyalty programs. These are so powerful. Repeat customers reduce risk in lenders' eyes. You want to make sure that you're providing an exceptional customer service experience. The most successful restaurant owners that I know will actually train their staff to ask each and every customer if it's their first time here. If they say yes, the best restaurants I go to will make you feel warm, and welcome as a new customer. Now that we've gone through the strategy and positioning that helps with getting the best restaurant financing, here are the mistakes that I see restaurant owners make repeatedly. Applying for the wrong loan amount. Don't ask for exactly what you think you need. Factor in unexpected costs, permit delays, and revenue disruption during expansion as well. Another one is ignoring cash flow projections. Lenders want to see realistic projections that account for reduced revenue during expansion phases. A third one is not having professional financials. This one is easy. Just DM me, email me, and I can introduce you to a bookkeeper. Because restaurants with professional bookkeeping and accounting get approved more often and for a lot better terms. Another one is timing applications poorly. Make sure to apply during your strong seasons when cash flow looks best, not during slow periods where cash flow looks risky. Here's the reality, guys. Restaurant expansion funding is absolutely 110% available, but it requires industry-specific knowledge and strategy to get the best funding for your restaurant. At Small Biz Heroes, we work with restaurant owners regularly. We understand your cash flow patterns, your equipment needs, and your seasonal challenges. And most importantly, we understand which lenders actually want to work with restaurant. We've helped restaurant owners secure everything from $50,000 equipment upgrades to $2 million location expansions. Each situation is different, which is why we create custom funding strategies based on your specific expansion goals and financial profile. Whether you're looking to upgrade equipment, open a second location, renovate your existing space, or acquire another restaurant, the specific funding products that make sense will vary based on your goals and your restaurant's financial profile. That's exactly what our team specializes in, matching restaurants to the right funding solutions for their expansion goals. If you're ready to take your restaurant to the next level and see what you qualify for today, give us a call at 888-859-8408. We'll review your situation, explain your options, and create a funding roadmap designed specifically for your long-term goals. Understanding these fundamentals will help you qualify for better terms regardless of which expansion path you choose. Your restaurant has proven it could succeed. Now let's get it the capital it needs to scale.